Ladies and gentlemen, good day and welcome to the 5Paisa Capital Limited Q3FY22 earnings conference call. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone telephone. Please note this conference is being recorded. I now hand over the conference to the management. Thank you and over to you, sir.
A very good afternoon, everyone. Myself, Prakash Dagdani, CEO and Director of 5Paisa, along with my colleague, Gaurav Munjal. We welcome you all for this conference call. On behalf of the entire team of 5Paisa, I wish you all a very, very happy and prosperous New Year. In last few days, we are seeing the third wave of Corona hitting our country, especially Mumbai, and I'm sure that most of us are ourselves down with COVID or some of our loved ones are. I hope and pray for your family. Hope all of them are safe and healthy. And I also pray that we all come out of this fast and very soon. Friends, 2021 has been a milestone year for us in many ways. One, we crossed 2 million customer mark in the month of October. We took almost 5 years to cross the first 1 million customers, but just 1 year to double that number to reach 2 million mark. I'm confident that we'll reduce our doubling number even further going ahead. Second, our mobile app, which is our main product, which attracts maximum turnover and revenue, crossed a milestone of 10 million downloads with an improved rating of 4.24. We also concluded a fundraise in the second quarter of this year, first quarter of this financial year, by raising 250 crore from marquee investors. And this capital raise was for our future growth. With such a strong year gone by, we enter 2022 with high optimism. Talking about numbers, after our fundraise in my previous calls, I clearly said that our focus will be on acquiring new customers, more and more customers, and this has to be followed up with revenue growth. I'm happy to say that consistently for 5 quarters, our quarterly run rate of customer acquisition is consistently improving. Even in this quarter, we acquired 4.05 lakh customers, which was 18% higher than previous quarter. Even on the revenue front, our growth has been in tandem with our acquisition growth. This quarter, we are reporting a 17% sequential growth in our top line and 62% sequential growth year on year. Our margin funding book has also grown in line with our broking activity by showing a 24% rise and hitting an all-time high of 360 crore of funding book. Friends, our consistent growth for previous quarter gives me a confidence that 2022 will also be a much better year for us. I would now like to take questions from you. Thank you.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star and 1 on your telephone keypad and wait for your turn to ask the question. If you would like to withdraw your request, you may do so by pressing star and 1 again. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. So our first question from Mr. Rishikesh Oza from Robo Capital. Please go ahead, sir.
Hi, sir. Am I audible?
Yes, Rishabh. Please go ahead.
Thank you. Great. Very good afternoon, sir. So my first question is, if you could just provide a breakup of the allied broking revenues.
Sure. So our allied broking revenue is around 30.9 crore, and the maximum revenue is coming from margin funding interest income. Gaurav, can you give the exact numbers? So
Yes.
before that, let me just give you that typically it consists of margin funding income, it consists of DP transaction income and DP AMC income. There are three income put together is our allied broking income. Gaurav, can you give numbers?
Yes. So our client funding book has grown up from 293 crore to 361 crore. So in the allied broking income, out of 30 crore, approximately 20 crore income is related to the client funding book. There is approximately 4 crore related to the DP charges, and the DP 4 crore another is the DP AMC, and rest is other 2 to 3 crore. So this is a major bifurcation of 30 crore.
Okay, that was helpful. And sir, my second question is, if you know what revenues can be done in the cross sales in FY23?
Sorry, can you repeat the question?
So sir, in our cross sales, what revenue can be done in FY23?
FY23?
Yes.
Okay. So see, cross-sell consists of all the products that we sell. Subscription is our the largest contributor to the revenue, and we are seeing a very good growth in our subscription product, and that product is picking up. So, but it is difficult to put in terms of numbers that So for example, for current quarter, it is almost our cross-sell income is 4.9 crore, but for the full year of FY23, it is difficult to put down the numbers, but I can tell you that subscription followed by mutual funds and gold. These are the few products that will be our main core products that we will be selling, and these are the products that will be contributing to our revenue.
Okay, no problem, sir. That is also one. Thank you.
Thank you, sir. Our next question from Mr. Bhuvnesh Garg from SBI Capital Markets. Please go ahead, sir.
Yeah, hi sir. Thank you for the opportunity. This is Bhuvnesh from Investec Capital. So actually I have a couple of questions. Firstly, sir, would like to know what would be our customer acquisition cost, and what would be our payback period, and what is the quantum of customer demat assets? These are my three questions.
So our customer acquisition, we have acquired around 4.05 lakh customers this year, and our broad customer acquisition cost is around 769 rupees for this quarter.
Okay.
What was your in terms of
Payback period?
So payback time is consistent between 8 to 10 months.
8 to 10 months. Fine.
Yes.
Okay. And sir, customer demat assets?
Demat assets, we would be around 4,500 crores.
4,500. Okay. Fine. Thank you.
Thank you, sir. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. So our next question from Mr. Prayesh Jain from IIFL. Please go ahead, sir.
Yeah, hi, this is Prayesh Jain from Motilal Oswal. I just wanted to check on a couple of things. Firstly, the customers that we have acquired are the first time possibly have seen some kind of a market correction in the month of November and December, wherein in the fag end of the November the volatility increased, and December there was some correction in the markets. So what are the key important trends that you would have witnessed in the customer behavior changes with regards to the trading mechanism in this period? And my second question is on the margin funding book, which you have increased on a sequential basis, whereas if I understand correctly, the cash volumes in the industry were quite weak. So do we mean that the cash volumes for us have increased against the trend of the market, and we have been able to support that MTF book, support the volumes with MTF book?
Sure. So I think so. The answer for both the questions I can give you together. One is that see, from in last few months, if you see, after this peak margin reporting got implemented, even from the time it got implemented 75%, and then from December it became 100%. The overall cash market volume has been consistent and it went down. But and so broadly today, a majority of the cash market volume, as compared to what it was earlier, now it is a majority delivery driven. So though the markets were down for last 1-2 months, or it was sideways, but the delivery and because most of the customers that we are acquiring, they are new and then they are coming for the first time, so they are entering to the markets and buying deliveries. So that has not impacted much in terms of the people buying deliveries. What has impacted is the people who are trading intraday in cash segment. So that has impacted. But that has been compensated by the growth in the derivative turnover. So despite market being sideways or down, the derivative turnover has compensated for that. So if you see our turnover from last quarter, which was at around 80,000 crore ADTO, we are now at an average of 98,000 crore ADTO. So consistently that turnover and the participation both from customer perspective and the number of trades the customers are putting in derivative segment, that has gone up. So a combination of these two has not impacted the revenue for this quarter. Now on the second part, because most of the people today are trading in delivery on the cash segment, there is definitely a need for margin funding, and that's why our margin funding book is also has gone up. Now obviously margin funding book is also very directly correlated to the market activity. So if there are sudden spurts or sudden spikes in terms of our market, or if there is a downturn in the market, then it may have an impact on the book. But what it looks like that consistently, if we are increasing the customer base and the customer base broadly trades in delivery, then the funding book will also increase in line with that and will not have much impact.
Okay. And any behavioral aspects of the traders, the intraday traders that you would have witnessed in the downturn or the range bound markets, which was possibly different from what would have been the trend, say 2 months before?
In such a short span of time, it is difficult to see a trend. And so if you ask me in terms of last 2-3 months, if there's a trend change, I won't say there's any trend change. But broadly, if you see that in last 4 or 5 quarters, what has happened, or maybe 8 quarters, consistently the trading activity, which was whatever, if you may call it as speculative activity, intraday trading or short-term trading, has moved completely towards derivative and completely towards options. And there are large section of customers who are now trading in options. So that is a change which has happened over a period of time. When the markets are sideways, the activity increases. Why? Because then obviously in derivatives you can take a sideways view, or you can take a bullish or bearish view. Any kind of view you can trade, and you can trade even in weekly options. So because of weekly options and more knowledge about options and more customers coming towards derivatives, so that volume has shifted. But this is happening and is only increasing quarter by quarter. So there is no change in last 2 months, except for the fact that more number of customers are now coming into derivatives and trading.
Okay. Got that. That's helpful. Thank you. If I have a few questions, I'll come back.
Thank you.
Thank you, sir. The next question from Mr. Jeetu Punjabi from EM Capital Advisors. Please go ahead, sir.
Yeah, thank you so much, and happy New Year to the team. So one question is, we've seen you focus on customer acquisition and ramping up the customer book over the last 3-4 quarters. The question is the next 4 quarters over the next year and a half, is that trend going to continue, or is that focus going to continue? And how, and do you have a number in terms of the number of customers you hope to acquire over the next 12 months?
So Mr. Jeetu, obviously, I have said in my previous calls also, and I am reiterating again, that as an organization, our focus is only on 2 things. That one, we acquire customers, and we improve our run rate on acquisition of customers, we acquire good quality customers, not just for the sake of acquiring it. And the measurement of a good quality is the translation of the acquisition growth in the revenue growth. So we are not deviating from that focus, and that will continue. We will keep investing money in branding activity, in customer acquisition, in our product and technology. So that is sacrosanct. That will remain, and that will continue for foreseeable future. And the result of that should be the growth in terms of our customer acquisition and growth in terms of revenue. Having said that, I have not put down a number because I don't want to, because any number can be a conservative number and can also be a very optimistic number if tomorrow market suddenly falls 20-30%. So, but in a normal business as usual, I see that the trend will continue for next 4 quarters at least.
Okay. Second linked question is from a product suite perspective. Are there new products you plan to add to the portfolio over the next 3-4 quarters? And what do you think of the missing products in your portfolio, which are very obvious that you should be having as the management thinks about it?
So if you see our product suite, we already have a wide range of product suite. I think even now, in all the competitive brokers, we have the widest product offering from mutual funds to derivative products to US stocks, gold, loans, everything. So I don't see a new product addition. By the way, we just launched one product some time back. I don't know whether I've taken that in my previous call or no, but we launched a product called as 5Paisa Well. That was at this, I think September end or October 1st week is where we launched that. So what we realized is when markets peak, a lot of people would now be needing advice or a professional advice where they can park the money and the decisions are taken by experts and a portfolio is managed. So we've started a product called as 5Paisa Well. It's a discretionary portfolio management service, a portfolio advisory service where we have tied up with Renaissance, which is run by Pankaj Murarka, and Abacus, which is run by Sunil Singaria. So and obviously they don't need any introduction. So they run this portfolio. It is in the first quarter, so we are seeing a good traction. Though the ticket size is 2.5 lakh for an investment, minimum investment. So it's a niche product, but we are seeing a good uptake. So that's something that we felt was not there. We had small cases, which is basically on a lower side of entry ticket, wherein you can enter as low as 1,000, 2,000, 5,000 rupees. But we did not have a product in somewhere in the mid segment, so we launched that. But apart from that, right now, we don't see new product addition, but we are working on improving the concentration of revenues that we are getting, that we are having from our existing products.
Okay. And one final question, Nitin Kamath from Zerodha has been pretty public about saying that investor reaction and a lot of other stuff can go pretty awry and market volumes can go pretty awry if there's a correction. Do you kind of, one, agree with him, and two, think that you could grow the business enough to go through that dip and come out bigger and larger even on a 12 to 18 month horizon?
I mean, this is an obvious fact that stock markets are cyclical. We have had a consistent bull run for last 2 years, and obviously it's not something which will be perpetual or it will be always here to stay. There will be sideways market. There will be downturns in the market, and because it's cyclical business, and suddenly you can see a 20, 30, 40% kind of a revenue drop or a drop in the customer activity. And it is not just the first time it is going to happen. It has happened in past as well. But obviously that is something that no one knows, and it's a hypothetical situation. So it is I can't plan for that. The way we do it is that we keep our costs in control. we always work on reducing our acquisition cost. We see to it that we don't have a large fixed cost, which in case of downturn comes back to bite us. So there are a few things that we do. We keep a second way of insulating yourself to a certain extent is obviously cross sales and getting more product which gives you annuity revenue. So we are focusing on stock SIP. We're focusing on mutual funds SIP, which are typically low revenue businesses, but they are at least consistent annuity business. So these are some things that we do. But yeah, obviously there'll always be a possibility of markets going down and revenues shrinking and the customer activity also shrinking.
Yeah, thank you very much. Good wishes. Yeah.
Thank you.
Thank you, sir. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. So our next question from Mr. Deepak Poddar from Sapphire Capital. Please go ahead, sir.
Thank you very much, sir, for the opportunity. So just wanted to understand, like out of 2.37 million customer marks, so how many of them would be active, and similarly for the newly acquired customer of 4 lakh in the last quarter?
Yeah. So typically from the 2.37 million customers, almost 1.45 million customers are active. So that's broadly 55-60% kind of a number. So that's the number, and so typically that is the number that we get in the first. So not in the first 30 days, but with 45 to 90 days. Typically 60-65% of our customers become active and they continue to trade with us. That number is in line.
So 4 lakhs, so about 2.4 lakh might be the active customer out of that 4 lakh acquired.
Yeah.
Oh, okay, fair enough. And in the past as well, we have been talking about maybe a 20% kind of a sequential growth and in our customer base, and whereas the revenue is likely to follow the customer acquisition trend. So is that what you expect likely to continue for maybe next 4 to 6 quarters?
Yes, I have I've always said that our acquisition and revenue. There is no point in having an acquisition which does not complement revenue. So our revenues and our acquisition will always be in tandem, and that's something that will definitely continue in foreseeable future.
Enforceable future. Okay, fair enough. Yeah, okay, that's it from me. Thank you.
Thank you.
Thank you, sir. The next question from Mr. Karthikeyan VK from Suyash Advisors. Please go ahead, sir.
Sir, good afternoon. Congratulations on the strong customer acquisition. A couple of things. One, I missed the breakup of revenue. So the other operating income comprises what exactly?
So other operating income is mainly related to interest on FD.
Interest on FD.
Yes.
The second thing is, I'm assuming that the fixed cost to income ratio that you've shown of 60%,
That is a direct reflection on the accelerated customer acquisition cost.
Yeah.
No, I'm sorry. That has gone. That's excluding that. So can you explain why that has gone up?
So it is not has gone up much. It is 59 to 60%. Basically, that we are doing tech hirings and there is some IT cost. Which is kind of fixed. So that has gone up a little bit.
It's gone up from 46% in the first quarter to 60. On a rising income base. Therefore, I was asking you this question.
Yeah. So, sir, in the last quarter presentation, Prakash sir has asked and told to the investor that there will be an increase in IT cost for 1 or 2 quarters. And it will be consistent for 1 or 2 quarters, then it will be stable. So that 46 to 59% is the reflection of that IT cost.
Okay, fair. Thank you so much. Thank you.
Thank you, sir. The next question from Mr. Prateek Saini from Myrod Asset Management. Please go ahead, sir.
Hello. Hi, sir.
Hello.
I just want to ask, I have a follow-up on this one. So the cost to income, what's your target, say, for the next 3 years?
Regarding cost to?
regarding cost to income ratio. It's currently around 60%. What's your target, say, for the next 3-4 years?
So definitely we are trying to reduce it. So our target, I can't tell the exact percentage, but yes, over the period of time we can expect approximately 50% in coming quarters.
All right. Okay. Thank you.
Thank you, sir. Next question from Mr. Vijay Kapre from Bryanston Investments. Please go ahead, sir.
Thank you for the opportunity and Happy New Year to the entire team of 5Paisa. I have a few questions.
Yeah.
Yes. So the first question is, how is the wealth product that we have recently launched different from a PMS product? And what are the legalities over there? Because for PMS we require a minimum 50 lakh investments, and here I think so we require 2.5 for one of the product and 5 lakhs for the other product.
Yeah. So this product that we have, it's a discretionary portfolio. So basically, it's not a PMS where the fund manager, he's been given the money and he is managing it. Here it is more of an advisory. So there's an advisory portfolio which is there for a customer, and the decision to invest is depending on the customer. So that's the difference. And hence, and we follow all the investment regulation rules, where this entire we don't manage the funds. As I said, it is managed by professional fund managers. I said there are two with whom we have tied up. One is Abacus and second is Renaissance. They are the ones who manage this fund. But the decision of investing, rebalancing, and selling lies with the customer, and it happens with the consent of the customer.
Okay. And also, we talked about the MTF income for us being 20 crores. So I was just doing my back of the envelope calculation. So if I take the average of the 2 quarters of the MTF book and use a 15% interest rate, it works out to 11 crores. So your number is 20 crores, my number is 11 crores. So what am I missing?
What is the interest rate that you have taken?
15%, 15.
Oh, no. So at the customer level, we charge interest 0.06% per day. So on an annualized basis, it comes to around 21.9%.
21.9%.
Yeah.
Okay.
So
per day. .9%. Okay.
Also, while taking the average, we give the monthly average. But if we go at a ground level, that if we calculate for the every day, the average may be a slightly different. So there is a small variation can be that due to that. Otherwise, it is more or less stable.
Okay. And also, I missed the payback period. How much was it for the new customer?
8 to 10 months.
8 to 10 months. Okay, I got it. Thank you so much.
Thank you.
Thank you, sir. The next question from Mr. Janish Karia from Elara Capital. Please go ahead, sir.
Yeah, thank you for the opportunity. So I just had one question. Can you just help me with the cash market ADTOs for this quarter and last quarter?
A cash market ADTO is consistently in the range of 1,200 crores for both the for both last quarter as well as this quarter.
Okay, thanks. That helps.
Thank you, sir. We have a follow-up question from Mr. Prayesh Jain from Motilal Oswal. Please go ahead, sir.
Yeah, hi. Thank you for the follow-up again. Firstly, just on the previous question, you said 1,000 to 1,200 crore of cash ADTO. How much of that would be delivery?
Almost today, 40 to 50% of the turnover is delivery. Anywhere between it ranges in the market, but yeah, that's broad range.
40 to 50%. Okay, got
Yes.
it. And secondly, client acquisition, you mentioned about activation rate of around 55-60%, right?
Sorry, acquisition rate?
Activation.
No,
the active clients upon the total clients.
Oh, yeah, around 60%. Correct.
Yeah. So my question is, why would the other 40% actually come on the app or download the app, or am I missing something out there?
That's a good question. I mean, that's something that even a lot of us also figure out, that people open Demat account, and one of the reason can be that we don't charge for opening an account. So sometimes people open account and they do not trade for a while, and some people then they come out after maybe 3 months, 6 months, later. But there is no definite answer that why people open account and don't trade. But typically we have seen historically that there is always some percentage of customers who do not end up trading. One of the way can also be that people might open one more extra account in just case of having a redundancy, because today opening a Demat account is very easy. It's app based. It's just downloading an app and opening it, and it takes not more than 5-10 minutes. So maybe as a redundancy plan, people might be opening 2 Demat accounts and keeping one at standby. But that's just an hypothesis. We do a lot of activities to nudge customers to trade, but then you still get some customers who do not.
Okay. Thanks for that. Also, is there any analysis that you would have on your on a trade that the customer placed? How much of the trades are based on the recommendation provided by 5Paisa?
So see, we are not much into the recommendation. We don't provide that. As a part of our subscription, we give long-term advisory calls. But broadly, we don't. We are not a research house in first place, so we don't go give intraday calls and derivative calls. Yeah. So it's largely customers do on their own.
Okay. Do you plan to add anything in terms of the research side?
No, not in the near future at least.
Okay. Thank you so much.
Thank you.
Thank you, sir. The next question from Ms. Kajal Gandhi from ICICI Direct. Please go ahead, ma'am.
Hello. Hi. Good afternoon, sir. Most of the questions are answered. Hi. I just wanted to know what is the impact of these margin and various regulations which have now kicked off fully, and also that in the money options are also now delivery. There also retail investors are getting stuck. So is there any runaway we are seeing, any impact on volumes we are seeing?
See, the first part is definitely there is an impact on the cash market turnover after this peak margin reporting has been there. So if you see for last 4-5 quarters, the cash market turnover, retail, I'm talking about retail, has broadly been the same, somewhere in the range of 33 to 40,000. On the best month, you get a 40,000 crore turnover, and on the worst month, you get around 28,000 crore turnover. But that's something which is consistent. So despite being the bull market for sustaining for 2 years, the volumes have not gone. So typically, the impact of the peak margin reporting has definitely come on the cash segment. The impact of that, as I said earlier, also that now it is more delivery driven. Second, the trading has shifted to derivatives, and hence you see the derivative volumes going off the roof. So there is an impact, but on the revenue side, the impact has been insulated by the rise in derivative. But on the cash, there is definitely impact. Now the second point is very interesting because it has happened, in the previous expiry, and we have also returned to exchanges seeking clarification, because that is something which is extremely dangerous. Now, as a broker, earlier we used to, also square off the position in the stock, especially in the stock options. We used to square off the position a week before. Right? We used to communicate to customers saying that there's just 1 week left for the expiry, so we'll square off. Now customers register a lot, and there were a lot of complaints we got that how can you square off a week before. So we came to not squaring off and let people do it. But then Hindalco happened. So we have written to exchanges seeking clarification that in the last few minutes, if there are things changes and the options go from out of the money to in the money, And the funniest part is none of the customers understand this. So I might pay just 2,000, 3,000 rupees to buy a lot in any stock option, but if it comes to a delivery, it might be lakhs, and then unnecessary, and most of the people do short, so they might end up in auction. So right now there is no solution, but yes, it is not a good trend. Typically, there should be an option given to customer whether they want compulsory delivery or no. But as a broker, we have now taken an option where we are just releasing a product version where we are asking customers to choose whether they want to take delivery or no. And if they choose not to, then we will square up a bit in time and not wait till the last minute. But yeah, this is an unfortunate incident which happened.
Okay. Okay. And sir, what are the views on the margin funding book? So in case the book expands further, what are your borrowing costs and what is the margin that you make?
So typically, we raise anywhere around 9.5, 10.5%, from all the external parties wherever, we get funds from financial institutions, banks. But broadly, 10.5% would be our cost, and we charge, as I said, 0.06% per day. So annualized, it comes to around 21.9. So difference is our earning. But typically, our outstandings are not for full year. So customers keep a debit for 30 days, 45 days, not much.
Okay. And last question is about the acquisition. So what are whether we have seen change in acquisition pattern or acquisition sources over period, because now we are seeing a lot of competition across?
Yeah, that's a very good question because, in this competition, everything, when you go out and do, marketing and paid marketing, everything becomes too costly because everything is competitive. So we changed, a strategy sometime way back at Q3 of last year, where we said that there is no point in, going out and spending money just to acquire a customer. Right, left, and center, you spend money without revenue inside. So we changed our strategy. We consolidated our, avenues from where we were acquiring customer. We started focusing internally. And if you see today, almost 65 to 70% of our acquisition either is happening through organically or through referrals. So I think if more people use it and spread a word, I think that is the best acquisition that we can get. Obviously, that may have some limitation in terms of the number, but then at least you are rest assured of the quality of customer. So that's the strategy that we follow, and we continue to do so.
Thank you, sir. Thank you.
Thank you, sir. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. So we have a follow-up question from Mr. Deepak Poddar from Sapphire Capital. Please go ahead, sir.
Yeah, thank you very much, sir. So just a quick clarification. You said the cost we can target about 50% in coming quarters?
No, I don't think so. Gaurav mentioned in the coming quarter, but over a quarter or two, 2 to 3 quarters, we'll get down that cost. You're talking about fixed income cost, right?
Yeah. So fixed income cost.
Yeah. So not in the next quarter, but yeah, in the 2 or 3 quarters, that percentage will bring down to around 50.
50%. And so this includes your marketing and employee cost as well?
So this doesn't include the cost is associated with acquisition.
Yeah. Variable cost is not included.
Yeah, variable cost is not included. Yeah.
Okay. Yeah. Thank you.
Thank you.
Thank you, sir. So we have a follow-up question from Mr. Prayesh Jain from Motilal Oswal. Please go ahead, sir.
Yeah, hi. Just wanted to understand this. So from a cost angle, you're saying that we'll move to something like a 50%. So does that mean your customer acquisition cost will be trending down further from the current level that you've achieved?
No. So this doesn't include customer acquisition cost. The whole idea
Okay.
that we wanted to achieve that we should be having some fixed cost, and in coming quarters the income will be on a higher side. So definitely our fixed cost should be on a reducing side. So our first target is to get a 50% in coming quarters, and then later we can think about a much better ratio. So, but the whole idea is to maintain a cost with the fixed percentage, so that I mean the costing rise only if the client acquisition role. Otherwise, it should be on the same level.
Okay, so if I understand it correctly, it is you're mentioning that X of customer acquisition cost, whatever the cost we are, you will be at 50%.
Yes.
Yeah, that is for near future, but typically in our kind of a digital business, your fixed income to your fixed cost to your income ratio keeps going down over a period of time, because then it's more of an auto mode business where people trade on their own and you don't incur recurring costs. But yeah, for because we wanted to invest in technology, and right now after the fundraise, that the cost, the percentage has gone up. It will come down, but this number is something that will keep floating downwards for some time, even after reaching.
And on your customer acquisition cost, we've seen a consistent reduction there. And if I recollect correctly, you mentioned in the previous call that we are very close to reaching the bottom of the customer acquisition cost. So do you stick to that view, or do you think that there is a possibility of even increase given that the competition is increasing?
No, I still see there is definitely a room for 10 to 15% reduction in the customer acquisition cost. That I still believe that we can still go further down. But in broking, as and when you scale your numbers, this is a number which will always be fluctuating and rather should come down. Why? Because if the brand becomes bigger and the more customers are being acquired organically, then obviously even if you get revenues, the cost of acquisition will be down. So rather than numbers, it might sometimes, for a quarter, it can be a blip that it might come up, because we keep experimenting in terms of if there is new branding exercise or if there is new channel that we are looking at acquiring. But broadly, I feel that this is on a reducing trend.
Okay. And another question was, your customer cost includes only marketing, or does it include advertising costs as well?
So it excludes the branding expenses, advertising expenses.
Okay.
That is not included in this, because those are ad hoc one-time activities and not. So that is something that we don't include here. But everything else.
Okay, got it. And last question from my side is on your cross-sell ratio. How many customers, or any color there that you can provide on what is the number of customers having multiple products, or any statistics there that you can provide?
So right now it is very less. Our current penetration would be not more than 1.1 product per customer. But so we are working towards improving that. But right now it is very less, around 1.1 product.
Okay. So when you say that your break-even is at around like 8 to 10 months, and your CAC is around say 750 rupees, so you're talking about a ARPU of somewhere around 2/3 of that, so around 1,000-1,200 rupees kind of a ARPU.
Yeah, not 1,000, but yeah, 1,200.
So that would be primarily broking ARPU more than any major coming in from the.
Yes.
Okay. Yeah. Okay. Got that. Thank you so much.
Thank you.
Thank you, sir. We have a follow-up question from Ms. Kajal Gandhi from ICICI Direct. Please go ahead, ma'am.
Just one small thing, sir. Whether we have utilized all the funds from the fundraising that was done, and also as you are mentioning that you have spent of late on technology, what will be the technology cost for the quarter or as a trend?
Gaurav?
Hello. Yeah. Our cost, so out of 30 crore of our software technology cost is approximately 35%, which is coming around 12 crore for the quarter 3.
Okay.
Yeah, and answer the first part. So obviously the entire fund is not utilized because it is utilized as a part of our working capital. But we had planned for investing that money into acquisition and technology and the new product line. So that is work in progress. But for now, that capital is deployed for increasing our margin funding book and also working capital.
Okay. Thank you very much.
Thank you, ma'am. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. So our question comes from Mr. Ray Furanda from BCP Securities. Please go ahead, sir.
Hi, thank you. Well, this is my first time dialing in, and I have a very brief question. Is it possible, because I missed certain parts of the call, is it pre-recorded? We can hear it later.
Yeah, this entire call is recorded. You can read it later from our website, both the transcript and the recording.
Thank you.
Thank you.
Thank you so much.
Thank you, sir. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. As there are no further questions, I would now like to hand over the floor to the management for closing comments.
Thank you very much, everyone, for joining the call. You can reach out to us at ir@5paisa.com in case you have further queries. We'll be more than happy to answer. Thank you very much, and have a good day.
Thank you, sir. Ladies and gentlemen, with this, we conclude our conference call for today. Thank you for your participation and for using Doorsabha's conference call service. You may all disconnect your lines now. Thank you and have a good evening, everyone.